What's up, ladies and gents? I met up with a friend recently, and as we were catching up, we got onto the topic of taxes and finances, and we ended up speaking about those topics for quite some time. One of the key themes in the conversation was the misconception that a lot of people have by saying that poor people pay a lot of tax and then wealthy people pay no tax whatsoever, which is actually, I would say, an incorrect statement, and a statement that must be analyzed a little bit more to get a better understanding of what the truth actually is. This inspired me to start a new series of videos to educate people about the UK tax system, with a few aims around actually teaching you what the system is and how it works, how you can actually utilize the different legal aspects of the system to have a bit more of tax efficiency, to pay less taxes, to keep more money for yourself, and also to show you that this isn't a game of me versus them. This is a system which in most cases is fairly balanced, and typically it isn't the wealthy, the middle class, or the poor who are actually in the wrong, who are benefiting from this system. It is the ultra rich, and I hope with these series of videos you will understand this more and look at ways of becoming more efficient in your taxes, in your finances yourself. Now, just to clear some things up before I get started, I'm not against paying taxes. As a matter of fact, I think that this is a thing that an exemplar citizen should do, to pay taxes. It is a responsibility if you live in a country. However, what I am against is if you work really hard to get somewhere in life, and then suddenly you have to give away half of what you earn just because the system says so. Now, I think that's something that we need to look a little deeper into. And what makes it even worse is that there are a certain group of individuals, of whom there aren't that many, who actually benefit from this system way more than the people that get scrutinized at all times. It is the ultra rich who pay no taxes, who actually get so many different exemptions, and who just ride the wave and become richer and richer, while so many of us need to pay so much money and don't benefit from so many different schemes that are around. Now, that is unfair. Now, in this video, just to kick off with this series, I'm going to explain what kind of taxes you are going to pay as an individual, whether you be a self-employed person or an employed person, right? And the other thing is, I just want to give you a little caveat that the figures and the percentages and the rates used in this video are based on the 2020-2021 financial tax year. So if you use this video in the future, or if you're referring to any other years, there might be some differences in the figures, so do your research. However, I believe that one of the key things is to become educated and to understand the topic, so you are not ignorant, so you aren't easily manipulated within that specific field. So giving you the knowledge about what taxes you're likely to pay, what the rates are, just an overall understanding and that kind of thing, and how you can actually structure your businesses and structure your streams of income to make it as most tax efficient as you can. Well, here is the video. There are four main taxes when it comes to individuals that I'm going to touch upon in this video. These are the income tax, the national insurance contributions, savings tax, and lastly, the dividends tax. There are three bands of taxes which determine the rate you're going to be paying. The basic rate, which is any income after allowances up to £32,500. The higher rate, which is any income after allowances between £37,501 to £150,000. And the additional rate, which is any income after allowances over £150,000. All your income is pulled together when it comes to working out your tax rate band. Now, some of the income is going to sit under the basic rate, some of it might sit in the higher rate, so you're likely to span more than one if you are a higher earner. Now, let's make a start with income tax. So, in terms of income tax, this could be through two different sources. One is that you're employed by someone, so someone pays you through PAYE, that is pay as you earn. So you pay tax as that money is given to you as a salary. And at the end of the year, you might have overpaid or underpaid a little bit of tax, and that is adjusted, and you can claim that money back from HMRC or pay the extra amount that you should have paid. The other source of income is if you are self-employed. Now, you can think of it as being a freelancer, and when you charge for your services and you deduct all your expenses, you are left with a profit. The main difference between those two sources of income is that when it comes to self-employment, you do not pay tax throughout the year. So you are left with, in essence, a lump sum at the end of the year that you have to pay to HMRC as tax. Now, when it comes to individuals, the main two taxes we're going to touch upon are income tax and national insurance contributions. So when it comes to income tax, the three rates that you're going to be charged depending on what band you are under are: basic rate is at 20%, higher rate is at 40%, and then when it comes to additional rate, that's charged at 45%. You also get what's called a personal allowance. So that is money that isn't actually taxed. That comes to £12,500. However, it reduces by £1 for every £2 that you earn over £100,000. So to give you an example, if you earned £125,000 from employment or self-employment, you no longer have your personal allowance. Not many people know about this. Your personal allowance is deducted from your overall income to arrive at a taxable income figure on which the tax is going to be charged. So for example, if you earn £50,000, you deduct the personal allowance, you are left with £37,500 on which 20% is charged because it only falls into the basic rate band. Now, when it comes to national insurance contributions, these are charged at different rates depending on whether you're employed or self-employed. And also they have their own thresholds and personal allowances in a way, which you can actually earn without having to pay national insurance contributions. They do not count towards your personal allowance. That sits completely separately, and that is concerned with your income tax. You only pay national insurance contributions on income from either employment or self-employment. You do not pay national insurance contributions on any savings income or any dividends income. For employees, the allowance you can earn per month without having to actually be charged national insurance contributions is £792 per month. And the other thing I need to mention is that this allowance is not shared across employers. So let's say you have two different jobs which pay you £792 each. You are not charged any national insurance contributions from any of the sources of income. However, when it comes to personal allowance, you do not get double the allowance if you have two employers. This is shared across all your income streams. Now, employees pay what's called a Class 1 national insurance contribution, and that is charged at a rate of 12% on income between the £792 to £4,167. Any income above that is charged at 2%. Self-employed people pay two different national insurance contribution classes. That is the Class 2 and Class 4. Now, Class 2 national insurance contributions are only charged if you earn over £6,475, and they are charged at a rate of £3.05 per week if you earn over the 6,475 figure per year. Now, the next one is what's called Class 4 national insurance contributions, and self-employed people pay that at a percentage of 9% on any income between £9,500 and £50,000. Any income that's over that £50,000 is charged at 2%. Now let's move on to savings, income and tax. So some individuals who, for example, keep money in a bank might earn interest on that money. Now, because that is a profit, you're going to actually usually have to pay tax on that profit. However, as you guessed, there are allowances and different exemptions depending on your status. So first and foremost, if that money sits under a ISA, which is an independent savings account, on which I will make a video in the future to explain a little bit more. But if it sits under that, you pay no taxes. However, if it sits outside of an ISA, then you do usually have to declare that as income and pay taxes if it goes over the allowances. So there is what's called a savings allowance, which is additional to your personal allowance. And that really depends on what band your other income sits under. So let's say you are a basic rate payer, then you've got £1,000 you can earn from interest on your savings, on which you do not have to pay any taxes. If you're a higher rate payer, then that's £500. And if you're an additional rate payer, then you get no savings allowance whatsoever. So then you actually have to declare that money and pay tax on it. Now, any savings income that falls over those allowances is charged at the same rates that your income from employment or self-employment is charged as well. So 20%, 40%, and 45%. Now let's move on to dividends, income, and tax. So if you hold any shares in a company, you may get what's called a dividend. So the way you can think of it is in a way like rent being paid to you. So if you own, let's say 5 shares, then you might get dividends on those 5 shares from profits that the company has made. Now, obviously, because to you personally, that is income, you do have to declare that and pay taxes as long as that falls over the allowance. And the allowance you have is what's called a dividend allowance, is £2,000. So if your dividends fall under £2,000, you do not have to pay any taxes on them. And that also is additional to your personal allowance from income taxes. However, if you have no other sources of income and dividends are your only source of income, then you can actually use your personal allowance towards this income as well as what you could do in terms of savings income. If there is no other income aside from savings income, the same rule applies. You can use your personal allowance as well to offset the amount of taxes you're going to be paying. Now, any dividends income that falls over the allowance, you obviously have to pay tax on. If you are a basic rate tax payer, then that rate is 7.5%. If you are in a higher band, then you pay 32.5%. And if it's an additional rate, then it is 38.1%. Now, in conclusion, just to summarize some of the key points in this video, there are 4 main types of taxes that an individual is going to be concerned with. And those are the income tax, the national insurance contributions, savings tax, and dividends tax. There are, of course, more complex taxes involved as well, but I will make a separate video on them because they don't concern most of the individuals, and they do require a separate video because they are quite in depth. Dividends tax rates are lower than income tax and savings tax. No national insurance contributions are paid if you only receive savings income or dividends income. And national insurance contributions sit outside of the different bands that I mentioned before. All income is pulled together when working out the taxes. And when it comes to the order at which the taxes are charged, income tax is first, savings tax is second, and dividends tax is last. If you are both employed and self-employed, there are certain exemptions when it comes to national insurance contributions, and that depends on whether you've paid and how much you've paid in terms of national insurance contributions on your employment income through your employer. I hope this video was useful. I know it was quite lengthy, and the topic itself is a little bit complex. I tried to make it as simple as possible so you can understand quite easily. If you do enjoy these videos and if you want more of these videos, leave a thumbs up. If you've got any questions specifically for me in terms of the things mentioned in this video or any other things to do with taxes, please leave a comment below. And otherwise, I'll see you in next week's video. Peace and love.